Actually, the problem is the dope is actually on the negative side because we have done a detailed analysis from the RHP, and first one is Smarten Power Systems. The merchant banker is Arihant Capital Services, and interestingly, the company is having a negative cash flow. We check the financials. There is, of course, the issue is there on the strength part. Of course, there is an increase in debt levels. That is something to ponder upon, and a high import dependency coming in. And when I speak about dependency, that is basically coming in from China, and there's a heavy reliance on imports. Now that translates into a forex risk. Importantly, the profit margins, they have seen a sharp jump. Now that's from almost 3% to 6% in just 2 years. Now will this sustain, or this has just happened only for the IPO? That's a question to be asked. Also, positively, the IPO is attractively priced versus the peers, and a higher ROE is there. Of course, joining us is CA Tapan Doshi. Tapan, what's your view on this company, Smarten Power Systems, and what your recommendation would be?
Yeah, sure. See, as you told, no, this there is a portion of the IPO, no, where you can say no, it's always a questionable. Now, one of the thing is that geographical concentration is 72% revenue is coming only from Haryana and UP. Their top 10 clients contributes almost 33% of the revenue. And as you told, no, their operating cash flow is negative. One of the reason is that they have a higher interest no cost. Now, if you see the debt has gone up to almost 16.6 crore rupees, so that is also one of the issue. Also, no, they rely a lot on imports from China directly. So there is always a forex risk or any geographical concern or trade concern. It will impact them directly. Again, they don't have any type of institutional government contracts. They normally sell it to the retail customers. So that also, no, you know how fragile is the retail sales normally, and it goes up and down. Capacity utilization is not so great. Again, as there is no as the capitalized utilization is on a lesser side, no, sometimes no fixed costs may impact a lot that PNL. Margin has gone up from no almost 2.8% to 6.3%. That is also one of the question you have to ask. See, if I see the financial part, of course ROE and all that is good, but when I see overall PNL and the scope where the company is currently standing, I think this currently this IPO is a avoid from my side.
So, Smarten Power Systems is an avoid call. Of course, let's look at Chemkart India right now. Of course, the merchant banker are Smart Horizon Capital Advisors, and there are certain concerns and positives regarding this upcoming IPO. Of course, most of the business is there on just bulk trading. Now, whenever there is a bulk trading, there is no moat as such because their own brand is not in there in question as such. That's more than 95% of this. Apart from this, there is also forex and import risk coming in, and interestingly, promoters are also operating in the same line of business. Now that is where the conflict of interest comes in. Apart from this, also there's a sudden spike in PAT. Of course, like the last issues analysis, this might be a window dressing ahead of the IPO, where almost 8 crore of PAT was recorded in FY23, and now that has jumped to almost 24 odd crore rupees. Will it sustain? That's the question to be asked. And of course, there is a lot of promoter related party transactions also, which is a cause of concern. But on the positive side, there is the asset light model, which is on the positive side. And interestingly, it gives us a mixed views when it comes to the overall IPO analysis. Tapan, how are you looking at Chemkart? Are there more concerns than positive?
Yeah, talking about this IPO, no, see, there almost more than 50 to 70% revenue is coming from Maharashtra, Gujarat, and Delhi. Again, a very fragmented business. Okay, there is no entry barriers as such, so anyone can easily enter. No, there is no moat as such. Again, 95% of the revenue is coming through low margin bulk trading. Now, you know, no, in this type of business, anyone can enter easily. Again, their top 10 buyers contributes almost 54% of the revenue, and they have a lot of churn out on their clients. Okay, they are almost 340 to almost 440 clients they are churning out. Forex and import risk is there because they are importing from China and USA. So exposure of currency volatility and all that there. Again, if you see there, whatever IPO proceeding they are going to get, they are going to use it for the working capital. Promoter related concern, as you rightly told, is already there. That is also a issue. Again, the PAT concern, there is a big spike on the PAT that need to be, one has to scrutinize why such a big spike. When I see the complete financials, all that, this IPO also looked like fully priced. That's why I'll give an award to this IPO also.